let's say they reset gold to $50,000. What does that do to copper? Mm. What does that do to silver for, the industrial, medicinal? What does it do to those? What does it do to the price of rice? What does it do to the price of other assets? And there's going to be massive dislocations. You should say when the derivatives market blows up. I mean, they are going to blow up. But if they blow up during this process, then Mother Nature takes over. And all of man's resets are done.
In today's news recap, Fidelity says the gold bull run is far from over. Despite already putting in a strong performance so far this year, Ian Sampson, multi-asset portfolio manager at Fidelity International, is confident gold's bull run can hold on over the long term. Having risen 27% in 2024, he noted the asset class is already up 28% over the year to 25 August, making it one of the best performing asset classes in Fidelity's multi-asset portfolios. However, rather than dial back any exposure to the yellow metal, Sampson said a mix of falling interest rates, sticky inflation, and subdued growth should all bolster the prospects for gold going forward. It should lead to a subdued dollar, which is gold's main competitor, as a safe haven and store of value, he said. We have never seen this scale of uncertainty and change around tariff policy, and the effects are yet to dissipate. Gold's status as the ultimate safe haven leaves it well placed for any further surprises. In addition, the unrelenting size of the U.S. budget deficit raises concerns about monetary debasement, which further boosts the long-term case for gold. Multiple countries, including China, India, and Turkey, are structurally increasing their holdings of gold in a bid to diversify exposure away from U.S. dollar, he said. Gold has long been a store of value and a diversifier, without the credit risk associated with paper currency reserves. More broadly, gold supply is very constrained, meaning even a small increase in portfolio holdings could move the dial. For instance, if foreign investors decide to move some of the $57 trillion they currently hold in U.S. assets, gold is a likely beneficiary. For much of the year, this had been through a combination of passive instruments that track the gold price directly and through a selection of gold miner equities. He said the latter has outperformed in the last few months, and we have taken the opportunity to book some profits, but retain exposure to the gold price. Now, we'll show you the best clips of the latest interviews, but first, smash the subscribe button and turn on notifications so you do not miss out on our recaps. And check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trading the gold-silver ratio and increase your ounces. With this easy-to-read book, you'll know everything you need to know to stack efficiently so you don't have to rely on market commentators. Enjoy the episode.
In Weimar Germany, when the currency went away, what did they do? The banks rewrote all of the debt in grams of gold. Yeah. So either you had gold or you weren't able to pay your debt. And if you couldn't pay your debt, you were out of business. The debt does not go away. The banks are not going to be turned upside down and bankrupted because the debt is worthless. They will do anything and everything to try to keep the banks whole. Now, one thing we've not talked about, and we probably should, is the talk of resetting the price of gold higher in order to basically create more liquidity. If you look at the gold that the U.S. Says that we have and has not been audited since 1956, but let's assume that it is all there, it is all unencumbered, and it is all owned by the Treasury. That's 262 million ounces is the total in West Point, Fort Knox, etc. And that's priced on the books right now at $42 an ounce. So from a balance sheet aspect, it's nothing. Mm-hmm. Now, if you revalue it to $3,400 gold, that's a bonanza, is what they're trying to tell us. It's a bonanza. Well, no, it's only $900 billion. What about the other $36 trillion that we owe?
Yeah.
Now, this goes back to something I talked about as far back. I started doing the math on this, I think, in 2014, 2015. Did the math 2 or 3 years ago. And every time I come up with a number, the comments section, people go nuts that, Holter's an idiot. He's retarded, doesn't know what he's talking about. But the number comes up to $125,000 an ounce. That's what's required, just north of $125,000 an ounce in order to cover the debt. And whether they go to that extreme or not, I don't know. I'm not inside. But I can tell you, if you own gold, you are going to have an official, call it a tailwind, because governments all over the world are wanting to revalue gold higher in order to create more liquidity and ease the debt situation. But understand, for years and years, forever up until now, the U.S. Treasury / Federal Reserve never wanted the price of gold to go higher because it's a direct competitor with the U.S. dollar. And if you look, just go back, 5 or 6 years, gold was $1,300 in 2019. It's more than doubled. And the price of gold more than doubling tells you that the purchasing power of your dollar has dropped more than 50% in 6 years.
In today's news recap, UBS, stay long silver, buy below this level. UBS urged investors to maintain long positions in silver and pointed to favorable entry levels after the metal's recent consolidation. Silver prices have recently consolidated around $38 per ounce, but UBS expects the metal to advance toward $42 to $44 in the coming quarters, provided the Federal Reserve resumes its rate cutting cycle. The bank introduced its third quarter 2026 target with this note, rolling over forecasts and making incremental upward adjustments further out. Its projections for the fourth quarter of 2025 and the first quarter of 2026 remain at $42, while forecasts for the second and third quarters of 2026 have been raised to $44. We favor a long position in silver and would add to positions on pullbacks below $36 per ounce, strategists Dominic Schneider and Wayne Gordon wrote. The team notes that drivers behind the bullish case are unchanged. Expectations of the Fed gradually shifting rates to neutral, a softer U.S. dollar in the mid to high single-digit range, and eventually stronger economic growth supporting industrial demand should underpin the market. However, the strategists caution that near-term growth concerns may limit upside, given that more than half of silver demand comes from industrial applications. Historically, the gold-silver ratio at 89.7x could narrow to 75 to 80x if growth accelerates, UBS said. With its gold forecast at $3,700, this would imply silver prices in the $45 to $50 range, though the bank considers it premature to reflect such levels in official forecasts. Its long-term target of $44 already points in that direction. Now, we'll show you the best clips of the latest interviews, but first, smash the subscribe button and turn on notifications so you do not miss out on our recaps.
What they want to do is they want to go to a central bank digital currency. That's the ultimate, because they want control over everyone, everything. And I think what they've done in China with the social credit system, that's ideal for a social credit system, because if you post something, you say something, you buy something that they don't like or don't want you to say or have or whatever, you get shut off. They'll just shut your account off and you're done, unless you have other assets that are outside of the system. So the first reset, I think we're looking at it right now, is trying to hoodwink the public into, stable coin's going to work, and push a CBDC. I think there will be some pushback, a lot of pushback to the CBDC. And I think the reality that nothing changed from the dollar system to the stablecoin system, I think that reality is going to be seen like immediately. So that reset may only last as short as 2 weeks, 2 months, what have you. So I think that'll be a short-term reset. I think then you'll see a revaluation of gold, and that will go along the lines of Mother Nature, but they can't let a full reset go or happen, a Mother Nature reset where everything gets reset. Because what happens if you've got 50, let's say they reset gold to $50,000. What does that do to copper? What does that do to silver for, the industrial, medicinal, solar, green energy? What does it do to those? What does it do to the price of rice? What does it do to the price of other assets? And there's going to be massive dislocations. And understand, we may not even get to any of this because if the derivatives market, or I should say when the derivatives market blows up, I mean, they are going to blow up. But if they blow up during this process, then Mother Nature takes over. And all of man's resets are done.
Null and void.
Right. Yeah, and then it becomes, then the system is completely burned down and it's got to reboot and start to re-energize. But at that point in time, it does not re-energize clearing trades with dollars.
Right.
Trades will be cleared by something that has real value behind it. And obviously, the easiest thing is gold. And the other thing is, think about it this way: the average person is not. When people ask, at what point in time should I sell my gold or sell my silver?
What are you going to sell it for?
That's exactly it. What are you going to sell it for? Where are you going to put your money?
Right.
And mass selling or movement away from gold or silver will not happen until there's a currency that people can trust. And in today's fiat world, people are savvy enough today to understand that, a fiat world doesn't work.
What do you think of his take? Do you agree with him? Is a big rally coming for gold and silver before a big top forms, or will gold and silver outperform all expectations? Let us know your honest opinion in the comment section down below. Smash the hype button if you enjoy our recaps, and check this video right here because you'll love it. I'll see you on the other side.